Hello friends, welcome back. Patrick here. Well, I didn't expect to make another review so soon. I have a lot of topics in mind, but what can I say? These SPAC mergers are coming in so quickly. Today we're going to be talking about Proterra that's going to be merging with ACTC. This is a long-awaited company. People have been waiting for this one for a while. Well, here it is, but the share price has gone up very, very rapidly. So is it a good investment now, right? So we'll have to look into that. So today in this video, we're going to look at what was the company doing before, what's their execution plan for after the merger, what's the current revenues and valuation, and what's their projections, and then how am I going to be playing the stock. So please like and subscribe. You guys know it really helps out. And I have to say, look, yesterday morning I got up, I looked at the news, and then I posted in the community tab that the merger was going to, they announced it, and the share price was at $18 pre-market. So I said, don't FOMO too much, but the valuation isn't crazy high yet. What happened then during the day? It went up to $25. So if you bought pre-market at 18, you could have made $7 per share. How much would that have been in profits for you yesterday? $700, $7,000, $14,000, depending on how much you have. So this is why right now these SPACs are going up and down very, very rapidly, often outside of the market hours. So that's why I've been talking about WeBull for 2 months now. I mean, I know it gets tiresome, but these are the opportunities where you have to be able to pounce on it. So that's why if you haven't looked into WeBull, now's a good time. I think you have until tomorrow to get those 4 free stocks, but even then, who cares about those 4 free stocks? Like yesterday, you could have made thousands with this, just buying it at 18 and selling it at 25. So if you're interested in looking it up, link in the description and in the comments. And now let's get to Proterra. All right, guys, let's get started. So what is Proterra and why are people so excited about it? Well, they are an EV maker. So yes, it is one of the latest best electric vehicle maker to come into the market. So, that's of course by itself is going to gain a lot of attention, but they are specialized in transit buses. This is what made them famous. Currently, they are the leader in North America. They have about 1,000 of them on the road, and they're constantly producing more. This company has been around for several years now. I think they started in 2010, right? And now they're going to be expanding into other types of electric vehicles. So to me, that is very exciting. This is where the future of the company is probably going to be, because the transit buses are great, right? But if that's all they did, they would be limited in their growth. But the fact that they're going to be expanding into other products is going to be very good. So some of the other ones, right, is going to be the school bus. Then you have the delivery truck. We'll look at that one. It looks very nice. And then you have the shuttle bus, transit buses. So they're going to be expanding into other types of electric vehicles, and that's going to grow the addressable market that they have access to. So now let's look at some of the basics of the transaction. And this is very interesting. These are pretty good numbers. So the company is going to get 278 million cash from the SPAC, right? But now you have to keep in mind that's not that great, because they're going to actually get 415 million. I have to find it, but it's here somewhere. 415 million from the PIPE, which is led by Chamath and a lot of other big investors. So again, this is another company where there's more PIPE than there is shareholder money, right? It's from the SPAC. So I don't really like that. I've talked about this many times before. I like when the shareholders of the SPAC have more power than the actual PIPE investors, which bought at $10. But what can you do, right? If you want to buy into Proterra, you have to deal with it. So they underwrote the company at $1.6 billion. Of course, this was at the IPO price of $10. This is a very, very nice valuation for the investors. I feel like this is very favorable. Of course, now the share price is going up very rapidly, depending on when you watch this video. That 1.6 billion is probably not really accurate anymore. So at closing, they're going to get 648 million. So in total, they will have 852 million on the books. So the company is going to have plenty of money to fund their growth in the next few years. Now let's look at what they were doing and where they're going. I forgot to mention that the company is scheduled to merge probably in April, so you have about 3 months to open your position if you intend to do so. If we look at the 3 branches of the company, right, I don't want us to pay too much attention to the transit, because these are the city buses that they're building from scratch, but this is what we already know about the company. This is what they're famous for. One thing that I didn't know as much about with the company is Proterra Powered, which is their partnerships with OEMs to build these other electric vehicles. So I'd like to focus a little bit more on that. I don't know if you guys were very familiar with this part of the business or not. So, and then you have the Proterra Energy, which is the fleet charging stations. So if we look at their partnership with Daimler, I feel like this is very, very valuable for the company and brings so much validation. Exactly like what happened with Laser, GMHI, right? Same thing here. So not only is Daimler a big customer for Proterra, but they're also an investor in the company. They invested in 2018, and then now they're leading the pipe. Yeah, Chamath is leading it, but Daimler is the biggest investor in the pipe. So this is huge for Proterra because it brings it a lot of validation and a very, very strong base. Because apples to apples, what's going to happen with Daimler if they have to pick between Proterra and one of the competitors? Well, they have a vested interest in Proterra because they have an investment in it. So most of the time, logically, they should be going with Proterra. And this is huge because Daimler has brands like Freightliner, Thomas. These are major brands on the market. And you guys know, or maybe you didn't know, but they have 520,000 annual vehicles sold throughout the world, and that amounts to 50 billion in annual revenues. So Daimler is not a small player. It is one of the biggest players in the market, if not the biggest. And this is why this is so crucial for this company. Well, what is that partnership going to amount to? Well, what's going to happen is they want to use Proterra's technology to build their delivery vans like this one, right, through the Freightliner brand. These are supposed to be delivered in 2021, and there's about 300,000 vehicles of this type in the United States. And then you have the Thomas school buses, which is supposed to, which is already in production since the second quarter of 2020, and there's about 480,000 of these vehicles in the United States. So having Proterra as their partner is going to help Daimler produce, like get to market quicker, right? But this is also very, very good for Proterra because it's going to help them have that base customers, right? By themselves, they couldn't do all this. They just can't produce thousands and thousands of vehicles yet. Well, going through Freightliner, that's going to help them sell much, much more units than if they were doing everything by themselves. So this hybrid model, we've talked about it with Hyliion, is going to be very favorable for a small company like this to expand much more rapidly than they could on their own. And if we look at their production, right now they can only produce about 680 vehicles per year. That's not a lot, and that's why I don't fault them for going with partners that are going to help them get a lot more revenues than they could on their own right now. We've seen this time and time again with all these electric vehicle makers. None of them at this time have the capacity to produce thousands of electric vehicle per year. And that's why it's going to take years for all of them to ramp up. So does this company have plans to expand this capacity? I'm not quite sure. They don't really talk about it a lot, but right now they're going to be relying on their third-party partners to be able to produce more than they can on their own. So they also make their batteries. This is not my specialty, but it seems like the company is using third parties for the cells, and then they have their own proprietary technology for the rest, right? So the modules, the battery packs, then the energy management system, they combine all of that for their own solution, and then they're going to be able to expand that throughout different types of vehicles. So right now we've been talking about the delivery van. That's their project with Daimler. They have the school buses, but then eventually they can build other types of electric vehicles through scaling up their battery. So we have like more construction type vehicles, the dump trucks, eventually the Class 8 tractor trailers. So a lot of these are going to compete with Lion Electric and some of the other big providers. Another one of their partners we didn't talk about is Van Hool for the coach buses. Now this one's going to compete directly with Lightning e-Motors that recently got an order from ABC Companies for 200 coach buses, right, electric. And that is one thing that we have to keep in mind is that, yes, there's going to be a lot of competition for all these classes of vehicles. But the thing is that the market is going to be so big that I'm not too worried about it because all these companies right now, as you can see, they can only produce a few hundred vehicles, a few thousand vehicles. So even if they keep growing, right, maybe in 20 years, the landscape is going to be a little bit different. But for now, none of these companies can actually make a big dent into the number of vehicles that are requested by the customers. So that's why my strategy is to build a basket of my favorite electric vehicle companies. And even if they're competing against each other, I don't see it as a big problem right now. I hope that makes sense to you guys. So they're targeting a segment of the market of 175,000 annual vehicles through their transit buses and then through their partners that are going to make the other types of electric vehicles. So it is a $225 billion industry, and that's why I'm not worried about it. That's what I was telling you guys about, is that there's not one company that's going to be able to fulfill all that demand right now. It's just not possible with the current stage of the market. Maybe in several years it's going to be different, but for now, a lot of these companies are going to be successful. We're talking about 4.4 million vehicles. So right now, the company is going after this segment of the market. So we talked about it, right? There's the transit buses, the school buses, the delivery vans, but then over time, they want to go into the dump trucks, the construction vehicles, the Class 8 tractor trailers. So there's a lot of opportunity for them in the future to grow, depending on where the market gets them. Let's look at some numbers, and you guys will understand why on paper this is one of the safer plays in the electric vehicle makers. So in 2020, they had 193 million in revenues, which is much higher than all their competitors in the commercial space. Most of them are still delivering prototypes or working on their first deliveries. Proterra has been around for several years, right? So we know that they can build these products and actually deliver them to their customers. Plus, they have 750 million in back orders, meaning that while they're filling more of their pipeline, they're going to be working on the orders that they have now, which gives them like a lot of lead for the next few years. And we know that this revenue is going to be coming in. So the fact that the company was underwritten at 1.6 billion and you're already getting 750 million in orders is very good and increases the safety for this investment, in my opinion. Now, if we look at the breakdown for the revenue projection, this is where it's a little bit more mixed, in my opinion. You'll have to decide for yourself if you like it or not. The fact that they think that they can go from 246 million to 2.6 billion, which would be 68% compound annual growth rate, if they can execute on that, that's great. But if we look at their graph a little bit more closely, the dark part is their buses, right? This is their proprietary technology. This is what their specialty is. And then the lighter part is their partnerships and then the energy aspect of the company, so like the charging stations. Well, we can clearly see that the electric buses, it's not going to grow that much, right? And this is their core specialty. Most of their growth is going to come from their partnerships with other companies. So this can be both good and bad. The good aspect of it is that since they're working with Daimler, which is one of the bigger players in the world, I mean, the company is not going to go to zero. They're going to have a lot of orders in the future, meaning the company has a very strong base. But at the same time, it has a lower ceiling because of the fact that they're going to be depending on the other companies. I would like them to take some of the profits that they're going to make over the next several years and start developing more of their own technology, right? So just not go with only buses, but start like that. Let's say that they do those construction trucks. Well, instead of going with a third-party partner, why don't they start to build more of their own technology? That's just the way I see it. If we look at the breakdown year by year, you guys can see that the 246 million of revenue this year is going to lead to a 120 million loss. We've seen this time and time again, right? These companies have a lot of expenses, especially in the beginning, while they're trying to ramp up their production. Now, in 2024, if they can get to 1.44 billion revenues, that's when they would get that 55 million in net profit. And then if they can scale up to their 2025 projections using their partners, that's when they would get to 2.6 billion-ish in revenues, and that would lead to a 390 million in free cash flow. So this is pure profit after all the expenses. Now, what are they going to be doing with this money? Well, they want to spend 200 to 300 million on optimizing their batteries. I'm not a mechanical engineer, so let me know in the comments, right? This is really not my specialty, but my understanding is that by working on it, they want to lower the cost of the batteries, which is the biggest expenses for these electric vehicles. That seems right? This is the way I'm understanding it, but again, I'm like, that's not my specialty. So you guys can see that the company has a lot going for it. It has a pretty strong base, which I like, but it will still have some challenges. This is one of the articles I found. Proterra electric buses taken out of service in Philadelphia. So Proterra's electric buses in Philadelphia have been taken out of service. 25 all-electric buses, fully sidelined since February. They didn't want to specify exactly what the problem was, but it sounds like it was a cracking issue with the chassis of the electric vehicle buses. So I don't know if they're going to be able to fix the problem. I would assume that they will. Maybe it's been done already. I'm not familiar with like the bus system in Philadelphia, but keep in mind that all of these companies are going to face real world challenges, right? These buses have to be in the snow. They have to be in the 110 degrees heat in like Phoenix. So there's a lot of different problems that they'll face in the future. But Proterra overall seems like they're doing very well and pretty well positioned to take advantage of this opportunity. All right, guys, we're almost done, but first we have to look at the valuation. We can't escape it. So right now, the valuation would be $4.72 billion. There's going to be 240.1 million shares times the current share price of $23. It dropped a little bit from yesterday's peak. So that gives us a valuation of 4.72 billion once you subtract the 852 million that the company is going to have in their bank account. So some of the things we have to look at is the PIPE, right? The PIPE is 41.5 million shares for 17.3%. So this is a decent amount. Always remember that after the merger, when the lockout periods end, these guys paid $10 for their shares. So if the share price skyrockets to $30, $40, they will want to take some profits. So that will cause some selling pressure. So always keep that in mind. That's why I personally always prefer, as a small retail investor, when there's more SPAC shares, in this case 11.6%, than PIPE shares, in this case 17.3%. So it's not a total deal breaker, but always keep in mind that there will be selling pressure in the future. Now, another interesting thing here is that there is an earnout of 2% of total shares outstanding if the share price goes up to $15, which looks like it's going to happen, and then an extra 2.5% at $20, $25, and $30. So this seems to be a new thing that we're going to be seeing a lot. These SPACs, and more importantly, the companies understand that the SPACs right now are going up a lot. So they want a better deal, right? If the share price reaches $30, they want to have more than what they negotiated with. This gives them a little bit more incentive to go through the SPAC process. So this is very understandable, right? But keep in mind that's going to increase the valuation in the end. So if we compare it with other companies, it does compare very favorably right now. I mean, there's absolutely nothing wrong with it. In my opinion, the two companies in the market right now, especially when we're looking at SPACs that compare the best with this company, is going to be Lion Electric, NGA, my current number one, and Arrival. Lion Electric at this point, right, this says 4.1 billion, but the shares have already been up. So it's more like 6 billion right now. I feel like it's great. And then you have Arrival that's over 16 billion right now. So this company at 4.2 billion is very adequately priced, even at the current share price of $23. I don't think for myself it's too expensive. Of course, I would prefer buying it closer to 10, but at $23, right, if you look at the valuation, it compares very favorably with some of its competitors. Now, if you look at the highest revenues, right, they project 256 million in 2021. This compares to Lion's projected revenue of 204 million and Arrival, which won't have revenue then. So the company is much further in its development than their competitors, as an attractive valuation at this time. All right, guys, in the wrap up, what do I think about the company? How am I even playing it, and does it get my seal of approval? So the way I see these electric vehicle companies, I kind of think about them like a football draft. You're going to have the first round picks, and then over time, you're going to be like left with the leftovers in the second and third rounds. Well, this company, people have been waiting for it for a long time. It is seen as one of the first round picks for the electric vehicle companies. They've been in the market for 10 years. It's not like it's an overnight success, right? They've been working on this technology for a long time, and now everything is coming to fruition in 2021. Now they're going to be doing very well, I do believe, with all of their partners, and the company has a very strong base. So this is one of the safest investments in the electric vehicle companies, in my personal opinion. And that's why if I can build a position and add it to my basket of electric vehicle companies, I probably will. I do feel like this is going to be a nice, stable base to build on. Now, are they going to end up being the leader in the industry? I have no idea, right? All of them are starting out now and just starting to ramp up, right? So even this company that's been around for 10 years, they're producing a few hundred per year at the most. Same for NGA. So we'll see which one ends up leading the pack in the next few years. But for now, in the short term, I'm just going to go with all of the ones that I think are doing the best, and we'll see who emerges as the winner. So at 22.40, right, after hours 22.55, and then the warrants are at 6.94. This gives the company a valuation of 4.2 billion. I don't think it's too much. I think there's still profits to be made. So I wasn't able to get a lot of shares, right? You guys can see it went literally from $12.35, and then the next day it peaked over $25. So you had to be very good to build a large position here between like what, $18 per market, and then early on at $21. So I'm sure most of you probably don't have a very strong position yet. So what I'm going to do, right, to add more shares over time is I'm going to wait until the next few days, see how low it goes. Often after the merger is announced, there's a big spike, and then it kind of drips down a little bit before it stabilizes and then starts pushing up again. So I'm going to see, like, once it stops dropping and kind of stabilizes, that's when I would try to add more shares. That's probably how I'm going to be playing it. This is not going to be my number one position, just because of the fact that, as I mentioned, I'm going for more of a basket approach. I'm not going to all in into any one of these companies, but that's probably how I'm going to be playing it. So it does get my seal of approval. I like this play. I feel like the company is going to be very safe investment. So that's what I think about it. So what do you guys think? Let me know in the comments. I hope you enjoyed the review, and I'll see you guys in the next video.